What's going on, everybody? It's your boy C-Zar, and we are talking about Alchemy Pay today, ACH USD. Hit that like button, subscribe. Thank you all for being here, and let's get into it. Okay, it's the 18th day of January, and here we are sitting at about 1.27 cents, up almost 14% on the day. It's nice to see. Right off the bat, my initial instincts, my gut feeling is telling me that we're in this very tight channel to the upside. We're at the upper limits of this channel. We've been pretty volatile, seeing the same volume we've been seeing. I think we're probably going to come back down. I wouldn't be surprised. It's over the weekend. It's Sunday. It would make sense that we come back down. Now, can we go higher? Can we break this resistance line here? Absolutely, we can. And if we do push higher, I would assume that we go somewhere between about 1.5 cents effectively to 1.72 cents, 1.725, something in this zone here. That's where I think we're going to continue to grow to. I just don't think we do it like this. I would more assume that we kind of continue to do what we've been doing on our way up there. That's the expectation. And with that thought, Alchemy Pay might be very tradable over the coming days, over the coming week ahead. And who's to say that it stops there? You could push higher, but let's get into the short-term stuff, and then we'll zoom out and we'll see where this thing can go overall. It's nice to see you pumping and recovering here. Let's look at the 1 hour time frame, then we'll zoom out. We'll finish this video off on the weekly time frame. Okay, 1 hour here, pumping up, looking good. You had a little bit of a flat spot here of resistance, right? Like there. You've broken through that, maybe a little bit higher even. Back tested it for support and continue to rally. Not a lot of volume. I shouldn't say that. There is a lot of volume relative to this, but it's not like a tremendous amount of volume, and you're getting less of it as you're moving up, and you're getting less of a movement too as you're moving up. I would think that you do come down from here. I mean, we see it here. You get this kind of like double top look. Here, these little double tops. Here, this slightly higher high. Here, you've got this slightly higher high too. I think it's more of the same stuff that we've been seeing. Bearish divergence on the RSI, stochastics, and the MACD. Likely you come down. I'm not calling for anything terrible. Just more of the same. That's all. More of the same stuff. Maybe you don't even go as low. Maybe you don't come down here. Maybe perhaps you do hold this area for support, but you're still going to come down. And from the current area, I mean, that's a 6% drop, 10%. And what would be very highly anticipated. I feel like this is a very easy kind of trading range to go off of if you're looking to trade. Nothing wrong with hodling, nothing wrong with DCAing, nothing wrong with that at all. That's my style. And if I was doing that here with ACH, I would just say not to buy here, but to wait until we are either at this line or below this line to DCA in again. And that line's at 1.19 cents. None of that's financial advice. That's just how I would do it if I was looking to DCA into ACH. Looking at the 1 hour time frame, again, bearish divergence on every indicator makes me think that we're going to come down from here. The 4 hour time frame, looking at the RSI being at the same areas it's consistently found resistance on since the 4th of January. I think we find resistance here. Same spikes that we've seen on all these little spikes where we find resistance. I think we find resistance here. And then stochastics, also with a little bit of bearish divergence, that would call for a move down to about 1.17 cents or a little bit lower. So again, something in that area makes sense to me. The MACD looks good. The stochastics, the RSI, they all look good, but just seems as though we're in this rather predictable, volatile range here. And what I will say is, if you're looking to trade this, don't cling to prices, right? Like if you're clinging to the idea that it'll go down here, don't cling to that just because it looks nice. You might only move here, and then you start moving up, and before you know it, you're back above where you originally sold, and now you're in this situation where you have to FOMO in at higher prices. It'll probably pull back anyways and continue to climb. Just take your if you want to trade this, take the drops for what they are, and then just look for, really, if you're using the RSI, look for the readings to be around the 50, if not slightly below the 50. That seems to be where you're finding support all these times. Don't worry about how much the prices move down from a percentage point. Don't worry about a target that you have in mind that looks good. Just look at the indicators. Stochastics getting to the oversold zone. RSI getting to the 50 or probably just below there. The MACD crossing red, right? And then staving off its bearish momentum, right? You're going from dark red to pale red. all those things in combination typically marks the low. So you need to get in by or before that moment. Daily time frame. Looking really good on the MACD. The stochastics look great. The RSI looks great. I mean, this move is tenacious. It's strong. It's relentless. It's kind of like the best way to do it. You're just like marching your way up. I think it looks really good. Weekly time frame here, zooming out a little bit. From a high to a low perspective, we are just above the 236. I would imagine we continue to build until we see something around 1.6 cents or higher. So with that in mind, going back to the original call that I was saying, I don't think that we stop here. I think we will potentially continue moving up just like this until we're at 1.65 cents or higher. And from the current price, that's about a 30% gain. Likely you'll see something that's around like a 40% gain, something around 1.75. I wouldn't be surprised if we went to like 1.8, 1.65, something in that area, okay? Sorry, 1.615. 1.8 to 1.615 cents, somewhere in that area. That's where I think you're going to go. Likely over the next week, maybe 2. Hit that like button, subscribe. Thank you all for being here. I'll see you on the next one. Okay, take care of yourselves. From there, I wouldn't be surprised if we did find a little bit of turbulence. Maybe we consolidate like this. That'd be really healthy. Maybe we pull back to the 236, these exact areas that we're at now. We find support and then we move higher. That's pretty standard. You could just keep pushing forward, but I think you're going to find some resistance here and consolidate one way or another. But ultimately, you should be moving higher, and then we could talk about higher prices than these highs. Then we could talk about new all-time highs, all that stuff. It's looking like you're getting a nice V-shaped recovery out of here so far. And if this is a V-shaped recovery, I mean, in theory, you should consistently move either to where the V started here or here. Wherever the V started. That's always the question. Where did the V start? Solid argument for here, not so much for up here. So it's either here or here. And typically with V-shaped recoveries, you stop just above where it started. So far so good in what looks to be a very tenacious V-shaped recovery. These things typically pick up the pace as time goes on. So I would expect that we do next week could be even more bullish than this week. You're up 15% this week. Next week should be more bullish than that. The last week was 23%. I wouldn't be surprised if we had something like that or more during next week's price action. So ACH looking really, really good here, you guys. We've moved up very fast in the past from these areas before. So I don't think calling for a price really all the way up to like 1.9, even 2 cents, or even as high as 3.17 cents. I don't think it's that far away. Regardless of where we stop and consolidate and then we push on, it's inevitable. I think we're going to move up. I like the structure. I'm talking, I'm rambling, I'm going to end it there. Good job. Did I mention that this is a double bottom? Did I mention that this is the ideal reaction? You're basically doing the same thing that you did last time when you went all the way up to 5 cents. The more I talk, the higher these targets get. I don't know. I'm just saying you don't look bad here. And your volumes, look at the volume. It's building. All right, I'm done. Hit the like button, subscribe. Take care. Shout out to Fonzilla. Hey. All right, bye.